Hi everyone and welcome to another update. Today we're talking about a company that I'm very excited about. This company is called Neurocrine Biosciences, ticker NBIX. It took me 7 to 10 days to fully research the products that this company has and the product pipeline. And it's really actually an interesting and easy to understand process. So I hope I can explain it relatively easy and relatively quick. I don't see any reason why this should be a 20 or 30 minute video. So this is obviously a biotech and pharmaceutical company, and more recently I've mentioned to you guys that I'm finding the best value in this sector. So when I'm looking for opportunities, I'm very much indifferent to the specific industry or sector that I buy, but I narrow it down looking at top line revenue growth, valuation, margin expansion, these type of things, cash flow yield, those type of things. And I keep stumbling upon biotech and pharmaceutical companies. These guys are extremely cheap and they're growing really strong top line revenue. And I think over the next couple of years, they're going to come back into vogue. Today's company that we're looking at, Neurocrine Biosciences, has been consolidating since 2018 as fundamentals caught up with its valuation. And as of right now, I think it's actually in a very interesting opportunity, and I'm more than likely going to take a position myself in this company for the following reasons. So Neurocrine Biosciences is very similar in nature to the investment that I made in GW Pharmaceuticals. GW Pharmaceuticals had a single product. It was a product that focused on epilepsy. And as they got through the R&D phase, they got approval, they launched their product, the top line revenue growth was absolutely spectacular. And what happens with a lot of these biotech companies is once you finish the R&D phase, all of that money, once it's spent, and the product starts to commercialize, the free cash flow yield starts to expand really quickly. The margins start to expand really quickly, and these companies become really profitable. So I don't like investing in a company that's at stage 1 or stage 2, but a company that has stage 3 with a commercial product, I'm very interested in it. And that's where Neurocrine Biosciences are, with a product called Ingrezza. That's the commercial name for a product that focuses on a neurological disorder called tardive dyskinesia. The generic name of the product is valbenazine, and valbenazine could be used for a number of different neurological disorders, which we'll talk about in a moment. So essentially what tardive dyskinesia is, if the end patient has maybe mood disorders, schizophrenia or something like that, they have a higher propensity to end up with this neurological disorder called tardive dyskinesia. And essentially, from my understanding, is when the dopamine receptors in the brain are blocked, it causes this involuntary movement of sort of the face. So your lips might go involuntary, like pop and pop. Your tongue might just slide out and hang out, involuntary, this type of stuff. And the product Ingrezza, for those that have tardive dyskinesia, improves the quality of your life significantly. This is not a rare disease. It's very much generic, and that'll give you some sort of indication as to how big the market is. So this is a really big market, and when we look at the revenue generation so far from this specific product Ingrezza, you'll see that it's got fantastic potential. From what I can see, there is absolutely no backlash from anybody for this product. It has raging reviews, and it seems to be incredibly popular. Now, although this is a single product company focusing on tardive dyskinesia, they also have fantastic product pipeline. The reason why I'm very interested in these type of companies is because they're like call options, where if that product pipeline of phase 1 and phase 2 products, if they get to phase 3 and commercialized, this thing will explode. If not, the Ingrezza product and the free cash flow and the valuation that the company currently has, it's fair to undervalued over the next couple of years. And that's why I really like these type of companies, very similar to GW Pharmaceuticals. I felt that there was about 400%, 450% upside in GW Pharmaceuticals, and in less than 7 months after buying it, it was bought out. We made 100%. I think that Neurocrine Biosciences is kind of in a similar position at the moment. I think over the next 1 to 3 years, there could be several 100% on the upside, which we'll get to in the valuation section, and we'll get to for the chart section. For right now, let's get straight over and have a look at some of the numbers for this company. So if the screen will minimize, there it is. So as you can see here, as of right now, it pretty much is a single product company. In 2020, Ingrezza generated $993 million, which is pretty much all of their revenue. They do have collaborations with companies like Takeda, but it's 51 million out of $1.045 billion. So it's relatively small amount. It's pretty much all coming from Ingrezza. And again, this product has fantastic reviews and it's generating fantastic cash flow with really, really, really good top line revenue growth. The generic name for Ingrezza is valbenazine. And back in 2018, in December 2018, obviously they called off the research, but they're looking for other ways in which they could use this product. And they were doing a lot of research for Tourette syndrome as an example to see if valbenazine would work for Tourette syndrome. If they can find another sort of disorder that this will work for, obviously the top line revenue growth for valbenazine is going to be fantastic. So in this case, Tourette syndrome didn't work, but it shows the initiative of management to find other opportunities with the same product. So as of right now, valbenazine looks to be sort of multifaceted, possibly. In this case, it didn't work for Tourette syndrome, but we could see this single product move into different areas for neurological disorders. But even if it doesn't, it's still perfectly fine. As you can see here, this is the product pipeline. Valbenazine is pretty much generating, as you seen a moment ago, pretty much all of their revenue. This is for tardive dyskinesia. Outside of that, they have a number of phase 2 and phase 1 trials currently going on, and they also have 2 products in phase 3 for endocrinology. So as of right now, there's a fantastic product pipeline, and the revenue is pretty much consolidated in Ingrezza with valbenazine. But moving forward, we should start to see a more diversified revenue makeup for the company. So I'm really excited about this company because I believe that Ingrezza is going to be a solid foundation for a company to build off of. And as we move forward, the revenue generation could be tremendous over the next maybe 5 to 10 years. I definitely see catalysts over the next 1 to 3 years for sure in the current macro environment with the cash flow generation and the catalysts that are coming up for a number of these products. When we have a look at their estimates, so let's have a look at their estimates over the past number of years. So the compounded growth rate for revenue since 2015 has been 85.9%. Now, that's not a fair reflection because the first 2 years, 2017, 2018, were massively distorted. 977% and 179%. However, it's still growing really strong. In 2021, we're expecting to see 15.2% top line revenue growth. And then in 2022, we're expecting that to increase to 26.3%. What's more impressive is not the top line revenue growth, which although it is slowing down, you're starting to see that in 2022 it might pick up a little bit. But what's more impressive is look at the margin expansion, the EBITDA margin expansion. It's gone from 9% to 10% to 18% to 30% to 38%. The profitability of this company is expanding massively. And that's due to obviously research and development coming to an end on a number of other products. And as well as that, it's as we're starting to see Ingrezza turn into a mature product, the margins are expanding quite drastically for that product as well. The company also has a greater than 30% free cash flow margin, and it has a 7.2% free cash flow yield. So as you can see in 2022, if we go down to the end here and have a look at free cash flow, you can see $601.8 million against $1.5 billion. It's greater than 30% anyway. I think it's probably closer to 40%. Let's just calculate it. So 601.8 divided by 152, 1.97. Yeah, it's 39.5% free cash flow margin against their revenue and against their enterprise value. The yield on this would be 601.8 divided by 8329.24. And we have 7.225%. So that's a fantastic free cash flow yield. And as a lot of you guys know, I look for a free cash flow yield of greater than 4%. So we're discounting into 2022 a company that should be kickstarting its growth again. So in 2020, we got 15%. That's expanding to 26%. But look at the margins. The margins are expanding all the way up to 38%, and the free cash flow is expanding as well. Very, very profitable company, and it's at that. It's in the phase right now where we start to see it expand massively. Very similar to what happened with Alexion Pharmaceuticals. Alexion Pharmaceuticals, I think, had a 50% EBITDA margin, and I think that a company like Neurocrine Biosciences could end up like that as well. Now, if we have a look at their valuation, and we have a look at their trailing 12 months, it's currently trading at 25 times enterprise value to EBITDA, and it's been anywhere between 25 and 30 times enterprise value to EBITDA over the past 4 quarters. So this is quarterly. So if we look at the valuation based on 2022's numbers, So their EBITDA here is $586.36 million. So if we go 584.36 and we multiply that by 25 over the next 18 months, not 0.25, excuse me, 584.36 multiplied by 25, you're looking at a $14.609 billion company. That's over the next 12 to 18 months. We'd be discounting 2022's numbers, and as we're already halfway through 2021, excuse me, we'd be discounting next year. So that would be about a $14.6 billion market cap. We divide that by the current market cap, which is 8329. We get about 75% on the upside over the next 12 to 18 months. On the lower side, I would suggest. So we're looking at the multiple over the past year, and it's traded anywhere from 25x to 30x. So I'd be looking at this and suggesting that there's possible that there's going to be 75% on the upside too. If we do this again, 584.36 multiply by 30, and we divide that by 8329, we get 110%. So there's anywhere, in my view, I think a fair value would be anywhere from 75 to 110% over the next 12 to 18 months. However, I think that this is a longer term hold. I think that that's just the nearer term expectation. And certainly when we go over and have a look at the chart structure, it looks really, really, really appealing. And again, I think that there's possibility for 400% over the next number of years on the upside. So where we are right now is we've completed off what would be considered a wave 1, wave 2. This here would be considered a wave 1, 2, 3 triangle for wave 4, and wave 5 for wave 3, A, B, C, D, and E before we start pushing higher again. So that wave 2 should be right there. So as you can see, this looks like a really, really, really strong chart structure. We'd be looking for a final fifth wave on the upside to complete off this much bigger, could be a wave 1. Given their product pipeline and the growth that you're seeing from Ingrezza, this could be all of a wave 1, which is kind of exciting. I'd probably be only playing the fifth wave and the potential 389% on the upside. So as you can see here, this bottomed out in November 2009 and it topped out in January 2011. That's about 18 months. So I would suggest that this here is probably the low for a wave C. We'd be pushing higher here for a wave D, wave E, and then there would be about an 18-month push higher here up towards about $424, which is about 389% on the upside. The reason why I suggest that there might be a little bit more sideways consolidation is because if we go into lower time frames and have a look at the 60-minute chart, the one thing that really stands out to me is that this breaks down in 1, 2, 3, 4, and 5. There's nothing wrong with that, but it would suggest that this here is a zigzag pattern, A, B, and C. So if that is a zigzag pattern, that there would be a wave C, would be in the process of completing off what I would consider to be some sort of D wave, which would be 3 waves on the upside, and then after that you would have truncated E wave before you push higher. In and around here, I think the valuation is really, really attractive. I think this is a company that the chart structure stacks up. I think the growth of the company stacks up for me anyway. It's growing really strong double digits, 15% in 2021, 26% in 2022, and it remains to be seen what we're going to see in 2023, but I've got a suspicion that it's probably going to grow above and beyond the 26% that we see for 2022 because of the product pipeline. So I find it very interesting. So as of right now, I'm looking at this opportunity, and I think it's probably a 1 to 3 year time horizon. If we go to the 2-day chart, and the target on the upside would be somewhere up around $424. That's essentially what I'd be playing for, and it's a company that I'm very seriously considering taking a position in. I know that I'm very much slanted towards biotech and pharmaceuticals, but I just can't find another industry that is as attractive from a valuation and a growth perspective and free cash flow perspective as biotech and pharmaceuticals. Very, very exciting things happening at the moment in this space, and when you fully grasp what the product is and how it works, it gets easier then to have a little bit of conviction. I'm not a scientist. I'm more of a numbers type person, and all the numbers make sense to me, including the size of the market for tardive dyskinesia, for example. They're also looking at epilepsy, I believe, epilepsy products and stuff like that. Yeah, epilepsy products. Again, another huge market. We've seen GW Pharmaceuticals swell up into a multi-billion-dollar market cap just on one product for epilepsy. So you can see that these industries that they're focusing on are really, really, really big industries. So this is a company that I think can do very well. I'm very much considering considering taking the position very soon, and I'll be holding it for a 1 to 3 year time horizon with a price target of $424. So that is my expectation for Neurocrine Biosciences.